Test, test. 1, 2, 3. Okay, great. Sorry about that, ladies and gentlemen. Just seems that what you need to do is log in and log back out again, or log out and log back in again, and everything is fine. So let me just grab my screen again. Thank you for your patience. Okay, let's have a look at this. Okay. Okay, so as I said, this week we just want to focus on what we were talking about last week and the current themes that we mentioned in the last webinar on the 26th of Jan, and really just give an update of what's happening right now as well. And last week, you'll see that in the comments in blue, we talked about the markets retracing, potentially due some type of profit taking in the run up to FOMC. Also, the seasonal buyers told us that we would be experiencing a short-term bottom in the commodity markets. And that's what actually happened. And I said it's a time to be careful rather than a trend continuation. We're more than likely going to see some type of retracement. And now the question to ask yourself is the market going to continue to retrace, or is the market going to turn at this point, right? Because we have approached some significant levels of resistance and support on some of the major pairs, which we're going to go on to have a look at a little bit later on. And that is really what's happening right now. Should we get back into the trend of the volatility at the beginning of the year, or will these retracements continue a little bit more? And we'll look at some charts in a moment just to really find that out. So the markets generally are still quite range-based. If we look at the euro, if they look at the euro against the US dollar, and why is this? Well, really the focus is on commodities. Everything, all the volatility that's happened over the past 3 months has all been on the face of oil prices crashing, which has in turn affected obviously Canadian dollar and the other commodity currencies such as the Australian dollar and New Zealand dollar. So really, really important we understand what's driving the market, because once that driver stops, then the markets will change to a different theme. Okay, so even though we've had Super Mario, ECB President Draghi, come out and talk about quantitative easing, the euro still is unfazed and has not moved, because the markets are following a different theme right now. So we talked about how the fact that the volatility had settled in the markets, and therefore we weren't going to see any type of major swings. That's obviously very common after such volatile markets that we've experienced from the beginning of the year. They need a breather. People who were positioned need to start profit taking on their positions. And a lot of people actually, if they're on the sidelines, will continue to be on the sidelines until everyone is flushed out who are already in positions. So we expect volatility to pick up, as a lot of the retracements have now shown that people have already banked the profits on most of their trades. So we do expect volatility to pick up, but it does need a catalyst. Okay, so it needs some type of theme for the markets to start moving again. Right now, there isn't a massive theme. In fact, markets are a little bit mixed right now, to be quite frank with you. And we'll see that with the reactions and price action to the news announcements we've had today and over the past week, which I'll come on to next. So last week we talked about, what's your focus? So from an intraday perspective, our focus was on running stops in a low liquid environment. So we'll look at running stops in euro dollar, pound dollar, dollar yen, and pound New Zealand. And that worked very well in that range-based climate, especially with cable, for example, British pound against US dollar. We can see the volatility massively increase towards the lows, which provided some great opportunities to trade the retracements. From an end of day focus, I was talking about focusing on structural retracements. Yes, the markets were retracing, but you've got to be careful, selling right at the lows or buying right at the highs. You have to wait for a structural retracement. So some type of 3-wave retracement or 5-wave retracement for you Elliott wave theorists out there. And that worked very well on some of the yen pairs. i.e. we've been waiting for those wave retracements, those ABC retracements, and we've got them. And I'm going to look at some of these currency pairs in a moment, because some of these have approached some key levels where the market may actually turn. So we've had the 3 to 5 retracements, and now the question is, what do we do now? And one thing that I've always said to remember is that right now there's a big correlation between stocks and the euro, and as stocks go higher, euro goes down, and vice versa. So that correlation is very, very important to know. Of course, the correlations come in and out, and they change over time, but it's very important to understand what's driving the market right now, so that once that catalyst changes, you can either wait and be on the sidelines like I am right now, or you can position yourself accordingly if you can try and forecast what the next theme is going to be using a variety of factors. So let's have a look at potentially what the next theme will be and what's been happening recently. So today, we had a German unemployment figures, and we had a much better data out. However, there wasn't an initial strong bounce in the euro. Okay, so we had really good German unemployment, which we know Germany is a big driver of the whole eurozone. However, on that better data, there wasn't a strong bounce. Now, this could be it's non-farm payroll week. We've got Bank of England speaking on Thursday, with MPC meeting minutes. So there's significant risk items on the calendar for the week. And perhaps a lot of people just want to wait to the non-farm payroll number before they start to get on board with a fundamental and technical theme again. But either way, it didn't bounce initially on strong data. However, it has, if we look at the charts in a moment, over the past few hours, it has started to grind higher. Okay. Now, again, euro's going sideways. It's a bit mixed right now. We've got ECB, QE in people's minds. We've also got the fact that we've got good data coming out as well, and the euro is the turnaround story of the century. Okay, that's where everyone kind of wants to be positioned. So it is a little bit mixed in terms of the euro, and really most of the action in euro has been against the commodity currencies like Euro Oz and Euro New Zealand, because that's where the flows are currently. We've also had the RBA decision, and it came in as widely as expected, with rates on hold. And the key takeaways from the RBA decision is the fact that domestically the market is doing very well. Actually, it's picked up extraordinarily well over the past 6 months, and domestic economy is actually quite strong. However, they do highlight a lot of concerns and fears over China and overseas. And the unfortunate thing with Australian dollar, because the economy is quite a small economy, they are susceptible to what's happening elsewhere in the economy, more so than any other nation. Okay, so generally what we're going to find with the Australian dollar is that if we have risk-off sentiment, so if we have stocks falling and things like that, then I think we're going to see Aussie grind lower. However, if we don't have the risk-off environment, which could be pretty close now, and there's no real reason for the markets to continue sliding now that all the fear and panic has settled, so we could see Aussie grind a little bit higher, and that could just be in line with the seasonals of March and April, which we'll have a look at in a moment. We've also got the New Zealand dollar dairy price and employment figures today as well, so you can expect to see some volatility in the New Zealand dollar, and there's some potentially great trades happening on the New Zealand dollar as we speak, something I'm going to look onto in a few moments. So we also had from the UK construction PMI figures out today, and this was an interesting one because it came in worse than expected. So we had negative data, and the British pound, it fell on the data as you would expect, but it has recovered, and it's recovered all of its losses, and it's actually, I think, probably sitting at the highs of the day. So that's very interesting. That we had a big fall in pounds, but it recovered very well. And there has been some good news announcements coming out over the past few weeks in terms of Cameron's deal with the EU. And the risk of a no vote, so the risk of the UK leaving the EU, has been on traders' minds over the past 6 months. And initial polls, and it is very, very early to really trade these announcements, but initial polls suggest that more people are going to vote for staying in the Eurozone, which is obviously a good thing for the British pounds. However, the pound fell on negative news and it recovered very strongly. And we'll look at the chart in a moment. Maybe because we have the EU referendum coming up in June as a potentially, that's the date that's been earmarked. So that could be a catalyst for pounds over the next few months. So really watch the headlines in terms of the referendum and potential indications on what the vote is going to be, because I have a strong suspicion that the market will be trading from headline to headline based on the EU vote. But really, the takeaway is that there's no strong overall theme right now, as we're waiting for the volatility to settle. In this current climate, we've got to wait for direction from the commodity market, and probably this week that's going to come from the non-farm payroll announcement on Friday. At the beginning of the year, we had a strong theme happening, and everything was great. And now's the time to preserve your capital as the markets are in a wait and see mode, and not get too overconfident with the way you've been trading over the past few weeks, because trading was a lot easier then because of the volatility. But it's about how you can preserve your capital when the market isn't as volatile and isn't going to potentially go the direction you want, because it's just going to run your stops in a low liquid environment. So definitely something to be careful of. All right. So let's just have a look at the charts now, and let's have a look at how price reacted based on these news announcements. So I've got the euro dollar here, and you can see from a daily perspective it's going sideways, and the mere fact it's going sideways probably suggests that it wants to go a little bit higher, in fact, considering what's happening in the backdrop of everything else. But again, personally, I haven't positioned myself on euro dollar, because it's just not worth trying to pick a direction in this market. As a trader, your job is to confirm the market is moving in a direction and then position yourself accordingly. Okay, because it's not a game about being right or wrong. It's just about going with the momentum. It's about going with the flow. And if we look at the euro, you'll see here on the hourly chart that we actually had the news announcement at 8:55. We had a small bounce in the euro, but that was it really. There wasn't anything else. There's no major follow through, which is very surprising considering the German unemployment number. So again, it's telling you the focus of traders and where they are. And right now, it's more than likely going to be a non-farm payroll announcement on Friday and the quantitative easing in the next ECB meeting minute. So personally for me, euro, I'm flat. I'm sure there's many people here that would have a case for why it's going to go lower, but the reality is you don't need to waste your time with that, to be quite frank. Your job as a trader is to always be in the right state to take opportunities, and analyzing a chart that's going sideways is not putting you in the right state, because you're just doing too much analysis, right? Clearly, we want to wait for the market to start breaking out from these highs, and then we could potentially initiate a long position, because it will probably go off and break these highs and run a lot higher. Okay, if it starts taking out some of these lows, so this low here would be an early warning sign. If it starts taking out this low, clearly we're going to run to this low and this low here. But right now, until it breaks to new highs or new lows, it's not really worthwhile doing anything with the euro dollar. However, from an intraday perspective, it has been quite interesting to run stops in a low liquid environment, because of course everyone's trying to get this right. Everyone's trying to pick a direction on this and hope it works out. So that's obviously the dream scenario for any type of trader, to run other people's stops. So euro dollar, really not positioned on that. If we have a look at pound US, so we talked about a early bottom based on the monthly charts. You can see that it ran into some of these significant lows here. Obviously, this is a bit messy here because there's so many low points to take from this section. Nonetheless, it seems that we found a short-term bottom here on the weekly chart. We just put in this setup. My theory is that if we run up for 3 weeks, then we could easily see a at some point we're going to see a down week as well, before it would want to continue going higher. If it will recover, my suspicion is that it would at least want to come down and test those recent lows before making a move higher. Just like something like here, for example, we had if we look here, market sliding down. January 2015, market starts retracing back up, but that wasn't the low. It came down to test it, it broke through it, and you can see here where this retested a low in April. That's when the market decided to actually turn. So we want to be seeing some type of similar pattern towards that. So I know it's a weekly chart, but it's important to keep that perspective in mind. So, we had negative data come out on the British pound, as you'll see. So that was the data point there. And we drifted lower at 9:30, but you can see here that we just kind of recovered and went to take out these highs here. Maybe to run people's stops here for it to go lower. Of course, everyone's either short on pound or wanting to get short, so it would have just trapped a lot of these longs here. So in terms of my analysis, I'm still a bear on British pound. I do think it's going to find some type of resistance here at the 20-day moving average. But you've also got to clearly you have to be careful when trading these type of retracements, because inevitably you don't know when this retracement is going to end. It could end at the 20 moving average, it could run higher and end at the 50 moving average, or it could just keep running higher. Right? My suspicion is that it would want to run it just a little bit higher, but in order to continue to trade lower. But as yet, there's not a massive reason to do anything on the pound against the US dollar as it is. Okay, let's have a look at the Aussie dollar. So Aussie dollar from a technical point of view is actually very interesting, because it's taken up this low point here, it's come down, it's retested. We've got this ascending trend line which has broken and retested here as well. You can throw on some fibs on there, and it may be about a 50% retracement from this swing high. We've also had the ABC retrace, which we were talking about last week to expect from the market, especially given the way it took out this low point here and rallied higher. But now where we are, it is set up interestingly for a short position. We've got the hallmark of a potential bearish engulfing bar at the end of the day. So from a technical point of view, it's very interesting. Fundamentally, it's not a clear-cut case on Aussie going lower with the recent RBA announcement. So this is more likely going to be following the flows of the US dollar from the non-farm payroll announcement. Obviously, a strong non-farm payroll will be bullish for the US dollar, and the fact that we're going to have a potential another rate hike this year, which could see the Aussie lower. Obviously, if the US dollar fails to impress the non-farm payroll, then we'll have to see the reaction, whether all the volatility will be a flight to safety or not. So I do see some from a technical point of view. You've got to position yourself on this kind of technical setup to the short side. Again, even if you're wrong, the reward to risk is in your favor to at least run it down to, if I take it down to up to the weekly chart. Just zoom out here, so you can see we've got some significant low points here that potentially will want to be tested. Okay, so this is your kind of recession lows at that point. So this is going to be an interesting one if it does get down there, of course, but definitely one to watch and put on the watch list. If we do get a run down here, and if this does trigger to the short side, then I'll be looking heavily to get involved on an intraday basis, because now we're in that phase one or that impulse cycle, which is always the most profitable part of it, and an easiest one to pick out. So really watching this closely to see how this will develop over the week. We've also had a New Zealand dollar against the US dollar. Now, from obviously it's just going sideways. You can see it's just pinned in between the resistance and support here. We do have a technical bearish setup here with this ABC retrace struggling at the 20. and the potential inside bar today if it ends like this. Again, I would watch for the news announcements out today on New Zealand dollar in terms of its employment numbers and the dairy price. If we do trigger this low and it is negative, then clearly, I think we're going to at least test these previous lows here. Okay, and look, you might not be around for the announcement, you might miss it, you might wake up in the morning, and it might already be trading down here. But nonetheless, look for your retraces on your intraday charts and look to trade it at least to this low here. It may find some support, but let's see how it tests, and it may want to even go down further than that. So some real key things happening in the commodity markets. If New Zealand dollar does get to this low, it does have a long way to go before it even tests the recession lows. The Aussie dollar is actually quite close to its recession low, but the Kiwi, you can see, is nowhere near it, purely because the Kiwi has been a little bit healthier in terms of its data. But nonetheless, it's something to watch out for potential targets. And on a weekly chart, if anyone who trades the weekly chart, you can see here we've got this support level turn into resistance level, and it's just struggling to break through. So if it does trip out any of these lows, we could potentially see some more sellers come into the market on New Zealand dollar. But right now, just got to wait for those news announcements. New Zealand dollar against the Japanese yen is also quite interesting because it is also pinned between a resistance and a support level. We've had the ABC retrace. It looks like it's potentially struggling here at the 50-period moving average, and may put in an inside bar train track reversal to initiate another short position. Now, the fear that happens is that the market could just take out the low, come down, find some support on these moving averages, and start moving higher and go for a 5-wave retracement, potentially to test these highs here. Of course, that is always the risk, but that's obviously why we risk manage on our positions, just in case we are wrong on the trade. Okay. Obviously, New Zealand Swiss as well was an interesting one. I was looking at this. If this does fail, obviously, if this is New Zealand Swiss lower, is Euro New Zealand higher. But it does look like it's taken out this low here. It's come up structurally. It may just want to fall down and start testing out some of these lows here, depending on how the news announcement goes. If we have, a bearish Kiwi today and a bullish NFP on Friday, then I think we can easily see some of these lows tested very, very soon. So definitely one to keep an eye out for. If we look at dollar CAD, so dollar CAD is just, well, it's just going sideways here at this bottom. It looks like a bit of a dead cat bounce here, given the fact that it's come down and declined so much. That was to be expected anyway. So in terms of dollar CAD, not really looking to do anything with this just yet. Again, it might be at a 50 moving average, but I want to see some type of price action. I want to see, what I'd like to see is the sellers try and take it lower and fail, because then that will tell me that there's no more sellers left here and only buyers will come in. But I really want to have a look at some type of price failure when we have such a deep retracement. What we're experiencing now are much more deeper retracements than we've experienced over the past 2 to 3 months. Okay, and you can see here, trading a market that's just doing this and going up is quite easy, and trading the retracements is quite easy. But when we have these deeper retracements, it's a little bit more difficult to try and kind of wait for the right time for the market to turn. If we look at dollar Swiss, the dollar Swiss is just slowly grinding higher, all the way up to this point here. Again, there's not really much to do here apart from go with the trend. It's going up right now, and given this double top here, I think at least at some point it was going to want to revisit it to at least test it, and then that would be a real key indication. If we get a strong NFP and more rate hikes on the calendar for the rest of the year, we can easily see this level bust through, and I mean, really, there's a lot of free space until the next high, all the way at 1.17. So some real potential big figure trading here potentially on the card. So definitely look out for that one there. So that's dollar Swiss is really just going with the trend. Again, it's more of an intraday chart. From an end of day perspective, there's not much going on. Dollar yen, if we look at dollar yen. So after we've had the surprise kind of Bank of Japan easing, the market's kind of rallied higher. It's to me personally, it's a mixed chart. You can see this is going sideways, and there's so many people that are going to call for it to go lower. Some people are going to call for it to go higher. Right now, I'm just not really positioned on dollar yen. I just want to see a little bit more clarity in the other markets before I start taking on position sizes on this currency pair. It is just going sideways. It is a little bit mixed. My concern would be the fact that after some of this easing that we haven't taken any significant lows, but we have tested that quite a few times. And if it does come down to this low here again, that more than likely that will break through. And then we've really got a lot of space before some of the next highs, near 110 really. So really, if it does come down, I probably won't be positioned short on the way down, and I might be getting into the party late. But if it does break these lows, there's still about 400 or 500 pips in it. Of course, if I get some technical and some fundamental reasons to take this short, then potentially we could take a position on there. But you'll see here, that's really what I'll be looking for. I'll be looking for a big seller candle and really take out people's stops, the buy stops, and really want to see some of the institutional sellers come into this and take this lower. Okay, so really the main focus is I believe it's just really on some of the cross pairs, to be quite honest for you. So, if we look at charts such as Euro CAD and Euro Oz, Euro New Zealand, there seems to be more structure in these charts than anything else happening right now. But also, we've got to be careful when the markets are in this kind of wait and see mode, that we don't try and push ourselves too much, because we just want to make sure we're in the right state when those opportunities do come on board. Probably in my case, probably next week. Okay, I think from an intraday perspective, there'll be a lot happening over the coming week, but from an end of day perspective, I think it is a bit of a wait and see mode for some of the key announcements to get past us and continue. In terms of the seasonal buys, is something to always look at, just to add that extra edge to your trading. We've always talked about the fact we're in February now, and Euro tends to perform better over the next few months. So January is actually the worst performing month for the euro dollar, for the euro currency. So January, February, March, April, you can see it tends to print some positive months on average. So that could be quite interesting to see. You can see that the pound is a little bit mixed, tends to decline over the next few months before rallying in April. I think the key is to match strengths and weaknesses. And we see euro doing a little bit better, but we also see Aussie, Kiwi, and Canadian dollar doing better as well. And generally, if we do get a risk on environment, I'll probably be looking to position myself on the commodities rather than the euro. But we'll see how that one plays out. But you can see the US dollar tends to not do that well over the next 3 months. As well as the yen, on average, not the best performer. So, euro yen, euro dollar is going to be an interesting one to look at, and some of the commodity currencies as well against the US dollar would also be interesting. You can see on dollar CAD, CAD tends to outperform over the next 3 months. So obviously that's dollar CAD going down. So that will be obviously quite interesting development in terms of whether the market will bounce here or not. So for me, given the technicals, fundamentals, and seasonals, it's a mixed picture right now. Okay, so as I said before, just to take your time and wait for the clear-cut trading opportunities. So as a quick recap, what I want to focus on and just recap on is the following. So over the past week, we've talked about the markets retracing, and we've talked about how we should wait for the markets to retrace in a structural fashion. So look for your 3 to 5 wave retracements or your ABC retraces. We've experienced that. Now the question is, will the market turn at this point, or will the retracement continue going higher? Again, wait for your fundamental catalyst and technical analysis, along with anything else in your trader toolbox to give you an extra edge. For me personally, from an intraday perspective, I'm waiting at this point for the daily chart to turn, or for the retracements to resume. Because if it doesn't turn here, we're more likely it's going to go a little bit higher as it breaks through resistance and support, and really focus on the strong versus weak. The most important news announcements for the week ahead. Today, we have New Zealand unemployment and dairy price figures, Bank of England on Thursday, and non-farm payroll on Friday. Okay, so given the seasonal bias, it's going to be quite interesting. And I think volatility is expected to get a lot higher over the next week and going into next week. So from a seasonal basis, we know that euro tends to outperform over the next 3 months, but we also know that Aussie, Kiwi, and Canadian dollar, your commodity currencies, also tend to outperform. So really all eyes will be on the non-farm payroll announcement this Friday to see whether or not, okay, look, are we going to see more US interest rate hikes? And how is the dollar going to react on that announcement? Because a lot of it is already priced in. Okay, and that's always an important thing to remember. Interest rate announcements are already priced into the US dollar, and we're experiencing oversold markets in some of the commodities. So I think it's a wait and see mode until we've got these announcements coming out. But if NFP is weak, then I'll be looking to buy commodities following the seasonal patterns over the next few months, because it's quite oversold, and the seasonal statistics suggest that, as well as from a technical perspective on some of the charts. Okay, as always, you've got to follow your process on what works for you. You've got to make sure that you risk manage appropriately and make sure you've got enough reward to risk in your trades. Where the markets are right now, are they going to turn? Are they going to continue the retraces? There's not enough reward to risk in a lot of the trading opportunities. So again, wait for the reward to risk to be in your favor, because you do need that buffer in the current market conditions. You need to have the probability on your side. So even if you are wrong more times than you're right, you're still able to make money through reward to risk and probabilities. But let's have a wait and see to see if the daily chart will turn at these points. Keep an eye out on the key news announcements for the week, and remember just to maintain your discipline and stay structured in your approach. And we'll recap here next week and see what has developed over the past week that we can use and analyze to forecast what's likely to happen and how we can position ourselves for really the next 6 months and the year ahead. This is Jitan Solanki from TradeVest. I thank you for your time and wish you all the best for the following week.